Nicholas Borys of Capital Link, and I would like to welcome you to another terrific panel during our forum. This panel is focusing on sustainability and sustainability as a core business strategy. I'm gratified that we have with us a great moderator, Ms. Kiara Konti from EY, and senior executives from 5 major industry participants leading shipping companies, which have exactly implemented sustainability as a core business strategy. So we were discussing just before coming online that what really makes a difference in these online forums is the topics and the panelists. And I couldn't be more grateful and pleased to have panelists of this caliber with us, and of course, moderator. So thank you very much. And Kiara, I will let you introduce our speakers. Thank you to all for being with us.
Thank you, Mr. Borys. So without further delay, welcome everyone. I'll start with introducing the panelists, and then we'll jump right into the discussion. So I'll start with the ladies. Ms. Charis Plakantonaki, Chief Strategy Officer at SBLK Carriers. Welcome, Charis. Mr. Kim Bale, CFO from TORM. Welcome, Kim. Mr. Matt Borys, Treasurer and Head of Capital Markets at Atlas Corporation. Welcome, Matt. Mr. Alex Hadjipateras, Executive Vice President of Business Development for Dorian LPG. And Mr. Brian Gallagher, Head of Investor Relations and Communications, and also member of the Sustainability Committee at Euronav. So welcome everyone. The topic I think is very interesting for all, and you're all very well placed to discuss. So I'll start immediately. I know that the aspects related to the shipping industry and specifically the impacts on the environment are many. One could say heavily regulated. Especially global developments around decarbonization. We have the IMO's landmark decision for at least 50% reduction in greenhouse gases by 2050. This obviously triggers new challenges and opportunities for the industry. We also have another set of environmental aspects that are very relevant to the impacts that the industry creates to sustainability, such as air quality, impacts from ballast water spills, waste, on biodiversity, resource efficiency, ship recycling, etc. And also we have the socioeconomic impacts, so impacts that relate mostly to your human capital, such as labor practices, health and safety, and human rights. So the question that I think jumps into everyone's mind is, given all these topics, how do you prioritize your focus areas? How do you prioritize your target setting, your action plans, and whether these strategic decisions are based on risk assessment, opportunity assessments, and specifically for decarbonization and the risk and opportunity assessment part, to what degree are you already implementing climate scenario modeling to make these decisions, understand both the physical and transition risks that climate change poses? So I'll say we can definitely start discussing, and then I'll pose some specific questions to every one of you.
So Kiara, I'm happy to start here and give the SBLK perspective. First, I would like to thank you, being a moderator, and thank also the Capital Link team for inviting me to speak here today. So basically, how we do as a company embed ESG in our strategic planning. For starters, sustainability is at the heart of our vision, which is to be the leader in sustainable dry bulk shipping. And in that respect, ESG performance is not simply a pillar of our strategy, as it used to be some years ago, but as Nicholas mentioned earlier, is at the core of our business and of everything we do. But what does that mean in practice? This means that we have an annual strategic planning process through which we set annual targets for the company, and then we move on to identify initiatives and action plans in order to achieve those objectives. And throughout this process, and along, of course, with our financial and public markets performance, we do keep track of a wide range of key performance indicators on ESG. So to give you a few examples, we monitor our emissions on the environmental front, we monitor our safety, security and quality through RightShip ratings, through port state control. We do keep track of our people's well-being through metrics such as LTIF, retention rates, etc. And very importantly, these targets are then linked to the performance evaluation and the subsequent remuneration of our management and of our employees. This is critical as it ensures that everyone at Starbucks is aligned with the company's objectives and that ESG is actually in practice embedded in our everyday work. We're also transparent about our ESG strategies and action plans. So every year we publish an ESG report where we report in great detail our sustainability performance. This process is actually a great tool for us because it enables us to review where we stand compared to previous years and also to industry benchmarks, but also to identify action plans on how to further improve our track record. And Kiara, you also mentioned about risks and opportunities management. For us, this is an everyday topic of discussion within our team. It is a core element of our corporate governance. We consider it to be a responsibility towards investors, our people, our partners, society in general. Let me give you an example. How will the IMO measures, both short-term and long-term, affect our business? When looking at short-term risks, for example, and opportunities, we have a dedicated in-house team at Starbucks who are working daily on CII scenarios. This is the carbon intensity index by the IMO. We do this for each one of our vessels. And this way we identify risks with regards to compliance, but we also determine opportunities. For example, which are the most promising energy-saving technologies? Does it make sense to invest in high-quality bottom paints? These are just a few examples of issues that we discuss here within our team every day. And then, of course, we also have the longer-term impact of IMO regulations. And on that front, what we're trying to do is that we're paying close attention to developments when it comes to green fuels. And to do that, we need to participate actively in the relevant dialogue within different initiatives. This enables us to better assess risks related to the zero-emission fuels. So, for example, safety concerns on the handling and storage of such fuels, but also we try to identify opportunities because looking ahead, we need also to make sure that
breaking up. I think Charis, or it's just me. Can you repeat the last part because I missed that?
Sure, of course.
Just me. Can you repeat the last part because I missed that?
Of course. I was just saying that in the longer run, we try to participate in the dialogue. With other industry stakeholders in order to better assess risks that are related to zero-emission fuels. For example, a major concern for us is the safety concerns on handling and storage of the new fuels. But along with the risks, there are also opportunities. So, for example, when it comes to future investments in new vessels, where will those opportunities lie for us? Thank you.
Thank you, Charis. And I suppose that this to 2050 target of IMO means a more also mid and short-term view on target setting. So, for example, what does this mean for 2030, or what does it mean for 2025?
Yeah, if I can chip in, Kim here from Tom, because I can echo a lot of what you just said, Charis. It's fully embedded in our organization from the board, which basically sets the targets and the strategy for our ESG as a whole. This is not just decarbonization targets, but as you also mentioned, the S and the G. So it's anchored there, the strategy and the supervision, and then certain elements are anchored in the audit committee, some in risk, but it's just a fully embedded way of operating in our organization. And I think, the things are moving quite quickly now, and I think the path we are on an operational level is that all of a sudden, this is, collecting data, governing data, documenting, controlling, and operating all the ESG is just the way we do all the other stuff we are doing on financial reporting or what have you. So it's just increasingly becoming just a part of our daily life and the way we are handling what else we are doing. So So that is one effort that I think we are all working on right now. And then in TORM, we are extremely transparent on what we are doing. And we published our ESG report earlier this year and got some great feedback on that. And we will enhance the reporting in the coming report that we are publishing alongside the annual report, where, so we follow the IMO 2030 target, and we will be carbon neutral operating our fleet in 2050, and we will aim at being more ambitious than that. So the thing is, how can we convey that as transparent as possible? And it's just an increasing effort to become more transparent on that. We have the same time. We have on climate change, on SOx emissioning, on safety, and what have you. It's very tangible targets that we measure quarter by quarter, year by year. It's part of our, as you do a monthly report and KPI that, you do the same on these targets and have specific initiatives on it. And I think what also drives it is the community. Of course, banks were out quickly on Poseidon, and in the Northern Europe, investors were out early, but you see a quick or a rapid pickup, for instance, or in the US right now, where investors are, luckily, I think this is an opportunity also, but luckily also putting a spotlight on how we perform, how we target set, what initiatives we make, how we report. So I think we are there right now. There's a huge speed ahead on this track.
And Kim, you mentioned reporting a lot, both internally and externally. Would anyone else like to comment on how the current lack of convergence when it comes to ESG standards is working for you, if it creates extra burden or if it's integrated in your reporting systems?
I can touch on that a bit. I mean, I think developing KPIs is a natural part of the early stages of a global focus on ESG and a company focus on ESG. Bringing that all together with a global focus has really been a recent thing, and I think it's up to the companies in some way to develop data, figure out what KPIs and measurements are relevant, and then the industry as a whole can use those to move forward. Early on for our industry, AER became a hot topic as a data point to kind of proxy or measure emissions, and the industry grabbed hold of that. On our side, data is a huge thing. We've come together cross-functionally to figure out every angle of ESG, and figure out, what do we have control of, how do we have control of it, and how do we measure it. So data is extremely important. Being able to put sensors on vessels, use satellites that were never previously available for use to collect is extremely important. We're lucky that we've got one of the largest container ship fleets on the planet, so a ton of data coming in every day telling us how vessels are being operated, what designs, what routes, what speeds are most efficient, and we're able to take that and make micro and macro improvements, but I think also inform us in future of what should we be looking at that we haven't been looking at before, and that then informs our reporting. Until we have those data points, we can't put them out there until the industry hears how we measure ourselves. So it's a process, and I think we're all in the early stages of it.
Thank you, Matt. Brian, would you like to also comment on the strategic priorities for you?
I mean, I think one thing that shipping lends itself very well to, and everyone on this panel has mentioned, I can only echo the thoughts. It's very embedded within our DNA, and we do in our own different shipping ways and shipping segments, a very complicated logistical transactions, very difficult jobs. And as Matt has said, there's a lot of data points from an operational and financial aspect, which is going through all of our businesses. So it's a natural progression, a natural follow-on that we would have this ESG function and focus very much at our core of all our business models. I think one thing that we, Euronav, are very keen to stress, and we feel maybe a little bit more at the pointed end because our sole business is transporting crude, which has its own wider sort of issues and reputation, is the 2030. We get a little bit frustrated when we see some of these other sectors talking about how they're going to be X, Y, and Z in 2050. You know, the executives who are going to execute that are going to be almost several generations away. It's quite an empty promise in our thought process, and shipping has got a real opportunity with the 40% reduction in carbon intensity as a goal, which we're all signed up for and we're all focused on. And I echo Kim's points. You know, there's going to be a very healthy competition for all of us to try and beat that trajectory. That's something which we're not seeing in other sectors at all. And I think sometimes shipping can be a little bit inward looking, and we've got a real opportunity. We are the most efficient transportation mode that's out there by some distance, and sometimes we're a little bit shy to say that as an industry. And I think that's what we'd be very keen is that you know this is obviously an inward looking panel, but collectively we can all come together a little bit more and you know, promote shipping and say that we're doing the right things, and we're not doing them in some sort of 20-30 year trajectory. We're going to do it at the end of this decade, and I think that's where we've got a real strong focus in terms of our own sort of messaging, and also trying to sort of cajole and get our peer group and our other shipping cousins to think along the same lines.
Thank you, Brian. Alex?
Thank you, Kiara, and glad to be here. I'd just like to make 2 points. One is that in order to reach all of these targets, whatever year we pick, we're going to have to rely on the crew on board. And many of the new technologies and fuels, it's almost like you have 2 engine rooms. So we've invested heavily in training and automation. And of course, I echo Matt's point on the data, but you know, we have to look at how you use the data quality. So we're really focusing on the human element and gender diversity on board the ships to build a pool, because we have a lot of new buildings coming into the market across many different sectors. So there's going to be a competition for seafarers. I was on a panel before this, and somebody mentioned that crew have almost become commoditized, and that's exactly the opposite of how we think of crew. You know, during the COVID period, it was, as we're continuing, it was one of the most challenging periods, and all of our crew continued to fly around the world while we were at home. So that's one element. And then on sustainability, I just wanted to mention, although we haven't done it, we are also going to think local, look at cultural sustainability, look at the communities where we work, for example, some of the provinces in the Philippines, and try and make a difference there. So I think that this is one of the touch points I just wanted to mention, that go local as well as looking global. Thank you.
Thank you, Alex. Now, Brian, back to you. I think it was very recently, back in April this year, that you announced a new sustainability-linked loan, which was linked to sustainability and emission reduction targets. So how can you elaborate a bit on how diversifying your funding into sustainable type of funding, while at the same time try to address all these challenges and have this target setting, especially the short and mid-term target setting? How is it working for you?
Sure, absolutely. Well, the two go hand in hand in many respects, and obviously at the core they've got the Poseidon principles, which we were very keen and very an early part of the drafting of those principles. But the sustainability loan you talked about there was an interesting one on its own. About a third of our funding today is sustainability linked, and that will only increase as we go forward over the next 12 to 18 months as we see other maturities in our other financing profile. But this was an 80 million euro revolving credit facility, which had a number of targets embedded within it. We had quite a diverse range of banks, both from Europe and also from Australasia, which again was important. But one of the key aspects was that we're looking to continue to diversify our funding as much as possible. The Flemish government actually came in on that as an investment for infrastructure. So that's a new partner for us. Of course, it's good to have that visibility, and of course that scrutiny that comes from the different targets. It's getting access to as many pools and as deep pools as possible. And from our perspective, but as a slightly different company in the wider context of our operations, we're very, very European focused. Our major cost base in terms of the staff goes through Belgium and Greece. And so therefore we pay those obviously individuals in euros. So this was a euro denominated loan, unlike most of all of our other loans, which are dollar. So that helps us in terms of matching in terms of costs and obviously that funding structure. It's very much embedded in terms of the targets and very much in line with what we're going to see. And we do believe if we get the regulations in place, we agree with what the Chief Executive of Societe Generale said recently on the sustainability side, that we would expect to see, we're only getting a 5 basis point improvement if we meet these targets, which is nice to have. And of course, the profile and the scrutiny and visibility for investors is important, as well as other stakeholders. But we do believe we'll start to see that move and there'll be a greater differentiation. So this is a train I think all companies are going to have to sort of catch. You can't ignore it anymore, because increasingly the sustainability features are going to be standard. They're going to be increasingly stringent, as they should be. They're going to be very, very challenging in meeting those targets. And if you don't meet those targets, then you should have some form of punishment. But also, if you are going to beat them, then there should be, and they're challenging and they're audited, then there should be a better reward structure. So we certainly would believe with some of the banks that we'll start to see that benefit, that, if you like, that reward process move upwards from 5 basis points into a greater number, which again will incentivize better behaviors and better movement. And I'm sure everyone else on the panel has got their own sort of focus on this. It's going to become more and more standard. And effectively, if you're not going to catch this train, I think you're going to get more and more left behind, and rightly so. What we also need to see, though, is that the banks themselves are under pressure in terms of who they're lending to, that this gives them the opportunity to push back and go back to their stakeholders and say, listen, we're lending on the right basis, and here's a profile and a reward structure, performance structure that is tangible and that we can measure. So we're really, really pleased with the progress we've made. We converted 2 existing loans into a $713 million revolving credit facility this time last year, and there's going to be further progress to make. It's a lot of hard work for the finance team, a lot of hard work for those doing the measurement, because it's another level, as both Kim and Matt said, in terms of data collection, which is already sort of floating around. But it means, you know, the goals and the rewards are definitely worth it. So we're really pleased with the progress we've made, and we anticipate making more progress going forward. We recently launched a bond in Norway of $200 million. And again, that will have some sustainability features as part of that funding as well. So we're very pleased with the diversity we've got, the depth of capital pools we're accessing, but it's only going to become more and more standard, and we welcome that.
Do you anticipate, given all this funding, that improvements in performance will further along allow you to improve your trajectory of reduction, your emission reduction pathway, and reset some of these targets to be more ambitious moving forward?
Absolutely, and I think a key part of that will be the investment in technology. We've got 8 ships on order, which is about 15% of our core fleet. And whilst the early ships will take delivery of won't have the opportunity, we're trying to future-proof that investment. So what we mean by that is we're strengthening the decks, we're putting more pipe work involved, so therefore we can have the capability, we hope, by 2025 to install dual fuel, conventional fuel and ammonia fuel as a propulsion system. And that can make a real quantum leap. That could reduce our carbon emissions by somewhere between 93 and 95%. And therefore we believe then that becomes a commercial opportunity in terms of how we can utilize that within the fleet. And you would do the same in any other shipping sector, but also a commercial opportunity to the banks, that we can sit there and have different funding structures for those particular ships. And what that will do, clearly, that's such a big quantum leap potentially. As you say, it will reduce, if you like, as a company, our emissions. And it isn't just about sort of future projects. You know, we're trialing at the moment. We've done a number of trials out there on biofuels, again, where there's some really good data and some really good numbers coming through from specific voyages. And again, it's just rolling that out and using that as a platform to drive that going forward. So yeah, round trip, it's very exciting. And I think, as Kim said better than I can before, you know, what is really encouraging from a shipping perspective is that we all sit there and we see the trajectory we're looking to beat in terms of where we are today. But there's an ambition to bring that trajectory forward and that gradient forward. So 2030, there's no reason why it couldn't be 2028, 2027. And again, that's bringing us the opportunity to get the pom-poms out, get the loudhailers out, and let's tell everybody about it. Because there's no other transport industry that is in a position to do that.
Thank you, Brian. Matt, coming back to you, you mentioned that you improve your performance through vessel design, travel speed, trade route, cargo carried. Can you further explain a bit your initiatives regarding the ship design part and how this helps you to decrease your overall footprint?
Yeah, definitely. I just first also wanted to touch on, Alex's point about the crew and the social side. I think sustainability is often directly connected these days in people's minds with environmental, but sustainability as it relates to social or your employees is super important. For our crew, we've got over 5,000 seafarers. Sustainability is massively important. So keeping our crew happy to work under the CSPAN banner, happy to work long-term, train newer employees and kind of keep that going is tremendously important to being able to operate at a high level of performance or high quality level. So looking at KPIs on that side, like lost time injury frequency as a proxy for safety is a big one, but other, say, smaller focuses from a public perspective are things like tenure and advancement with the company, which indicate quality of our training programs, and that keeps our crew training newer members and creates a positive feedback loop. And I think just comes down to the right companies will do things well, or the good companies will do things right, and that's how companies like ourselves will separate ourselves over time through taking care of our employees. So wanted to touch on that first, but on the environmental side, we're focused on the pursuit of a zero carbon environment and guided by IMO 2050 and many of the targets the industry has been setting. But as I think everyone's touched on, it's a transition for our industry rather than a light switch that can be flipped overnight, and some of the technologies are still coming out. So for us, our environmental efforts have come a long way over the last 10 years, with eco designs being the key focus. Our projects and tech team is always keen to enhance vessel design, figure out what they can tweak, how they can improve. That's kind of what gets them up in the morning. But we're also dependent on customers' interest in these designs. We're part of a supply chain, and that's why our customer partnerships are critical to us and to this evolution. So we've also tackled this from a supply chain perspective. While we own the vessel and the vessel is part of the problem or part of the puzzle, the other part is our customers' operation of those vessels, or our customers' desire for, say, speed is a major factor. And we've been engaging with our customers to align incentives where we track and measure the emissions performance of our vessels, and depending on how the, say, guidance of those vessels or the speed is impacting the emissions, we'll award our customers for good behavior and potentially penalize for poor behavior. But aligning across the supply chain is going to be incredibly important, because just making a unilateral decision as an individual company can only go so far. And then in recent years, with a greater global focus on ESG, emissions targets, pathway to net zero, aside from just design changes of vessels, alternative fuels have naturally become the major focus. We've recently built a number of LNG vessels for our customers, which, as we've been discussing, are not the end solution, but are part of the transition and can reduce emissions by 25 to 50% versus conventional fuels at the higher end with bio-LNG. But that's that along with, some recent developments on methanol. These are great transition technologies that got us part of the way there. The next steps continue to be an evolution. We're exploring, I think, in partnership with across the supply chain. The solutions and related infrastructure will take time to develop. We're a long asset life industry, and there's a lot of infrastructure involved that will be transitioned over time. And things need to be economic, but I think the global focus on emissions creates an explicit and implicit cost, which speeds up that transition and is a positive for everyone.
Thank you, Matt. Charis, I know that SBLK is working a lot on decarbonization, but also air quality, and specifically SOx emissions are again being regulated for the industry. So given your recent decrease in sulfur emissions, could you care to elaborate on how you did it? Because the decrease from last year is very impressive. So I'm guessing you invested in that.
Yes, of course. So when it comes to our SOx emissions, we completed the Herculean project, I would say, in terms of exhaust gas cleaning systems early on. So before the January 1st, 2020 deadline of the IMO sulfur cap, we had equipped with exhaust gas cleaning systems the majority of our fleet. And this way we have been able to achieve major reductions. And of course, we expect to comply also timely and very efficiently also with the upcoming decarbonization regulations. I don't know if you would like me to elaborate a bit on that front, because we do have a major program ahead of us in terms of decarbonization strategies.
And you want to elaborate a bit on that? Is it
Sure.
Close to?
So as you mentioned, during the past years, we have already done good work on improving the efficiency of our fleet. This has been part of our overall operational excellence program, which has, of course, given us also environmental benefits. For example, and as others have mentioned in the panel, we have also deployed telemetry across our fleet to have accurate and real-time emissions data. And we also have a dedicated in-house team who continuously monitor the performance of our vessels. We're also piloting latest technology platforms on voyage optimization, and I'm sure you're all seeing a lot of such initiatives coming up in the market lately, which deal, for example, with the route optimization, speed optimization, trim, optimal arrival, etc. Of course, optimal timing of dry docks, optimal timing of hull cleaning, the use of good quality vessels, bottoms paints, piloting of energy saving devices. Now, all these are topics that we discuss within our management team on a daily basis, so it's not a one-off discussion every year or every quarter. And along with the performance team that I mentioned earlier, we also have a dedicated research and development team that keeps track of all the technologies on energy efficiency, and which assesses also and pilots promising solutions. And since we own a large fleet, we also have the advantage of spreading the cost of any new pilot across many vessels. At the same time, transparency and collaboration with our partners is also critical. It's already mentioned by other panelists. We do share our carbon intensity data with our banks, for example, through the Poseidon principles, with our charters, through the Sea Cargo Charter. Same as Euronav, this year we also engaged in a sustainability-linked loan facility with one of our banks with a commitment to comply with specific carbon intensity targets. And this happens, of course, even before the IMO CIR regulations kick in. Now, looking into the future, our vision is to be front runners in the overall industry effort to decarbonize. And we have laid out a quite comprehensive strategy with tangible objectives in order to achieve that. Part of this strategy is, of course, research and development on the green fuels, the zero emission fuels. Just to give you a few examples, we participate in a number of R&D consortiums with other companies which focus on the feasibility for the use of green fuels, biofuels, ammonia. And it is important to note that we are fuel agnostic. So in that sense, we are examining different solutions at the moment. We're also active in industry alliances and partnerships which work to develop the roadmap and strategies for the takeoff of green fuels. For example, Getting to Zero Coalition, the International Bunkering Industry Association, where we sit on their board. And another key element is to look into the climate-related risks and opportunities ahead of us. And here we have been much assisted by our participation in the Carbon Disclosure Project, which you may be familiar with. This has provided us with a very solid framework to perform climate risk analysis. Now, of course, there are also challenges and opportunities ahead of us from this energy transition, and uncertainty as to which will be the fuel of the future is the elephant in the room for all shipping companies, not only related to the technology on board ships to burn these fuels, but mostly related to the production and availability of the new fuels. And of course, the pricing of the fuels, which unless there is some type of government subsidy or some contract with the charterer to pass on this cost, it is expected to be multiples of the cost of today's fuels. So in the shorter term, we need to comply, of course, with CII and EXR regulations. And we expect that this will either lead to increased cost for us in terms of energy saving solutions, or at some point we will be forced to reduce fees. And of course, if neither of these two solutions work, we may be forced also to recycle some of our vessels. Now, regional regulations such as the European ETS will also have additional costs for us for as long as we're burning fossil fuels. And in the longer term, a potential reduction in the demand for coal could also impact our business, as coal is one of the major dry bulk cargoes being transported globally. So this is what we see on the risk front when it comes to decarbonization, but then we also have, of course, opportunities. And we believe that companies that are proactive in monitoring the performance and in trying out and investing in new technologies, we should be able to improve our efficiency early on, whether technically or operationally or both. And this way we expect to gain a competitive advantage. Now, whether this comes through complying with the regulation and being able to trade your vessels, or whether through reduced fuel costs, we expect to be seeing an advantage on that front. And also by being transparent on our emissions and working together with our partners, as I've already given a few examples, we do expect to strengthen our relationships with them and perhaps receive benefits such as reduced financing costs, potentially better chartering rates in the future. So these are a few opportunities in the short term. And a final note on the longer term, there we should be able to be at the forefront of development of green fuels. And if we manage to achieve that, we may be early adopters of new technologies, and we may be able to invest early on in the most promising zero emission vessels, of course, as soon as the landscape around the new fuels clears out. Thank you.
Thank you, Charis. If 2 minutes are left at the end, I want to come back on the climate, financial impacts of climate risk. But Kim, coming back to you and back to sustainable finance, we've seen that TORM has set very ambitious targets, more ambitious than what the IMO suggests for 2050, and again, very ambitious targets for 2030. How do you integrate these goals into investment strategies and sustainable funding?
I'll try to do it brief. We have an first of all, we have an integrated platform in TORM. So of course we are a ship owner. We own 85 product tanker vessels, but we also have commercial and technical management in-house. So I think on an integrated platform we call One TORM. So having said that, so it starts with the customer, and I think you put it nicely, Matt. So the cooperation with the customer and how we set ambitious targets together, the demand that the customers put upon us, and the ability for us to deliver to that promise from, say, our platform basically driven by the tech department, and in the end having optimized vessels that has again and the most optimized value in market terms. So it all ties together, of course. When we talk about investments, I think about it 3 ways. We have the daily, let's say, add-on optimization projects, as we've touched upon in this panel already. There's a lot of them. We do it on hull, we do it on energy efficiency and so forth, on paint and what have you. Route optimization. I think we all are becoming more and more ambitious on all these elements and can apply data much more detailed and using AI frameworks that will allow us to optimize it further. So, but many of these are integral or small improvements that you put on a daily basis that will add up to solve the issue. Then there are the more say 5 to 10, I call them 5 to 10% advancements that you can make. There are several solutions of that. We all know them and we work with them, and you need to implement those also and invest in them. And then, of course, as I think Charis called it, the elephant in the room. So let's get ready for when we have the green fuel of the future that we believe in. And so when we order new buildings, we will get them as ready as possible. I think Brian also said it, enhancing deck and what have you. So we're ready for the new fuel of the future. And all these, so that's how we think about it. And then I think if we talk about investments and optimizing our vessel portfolio, so you have the commercial aspect, you have the financial aspect, and you also have the environmental aspect of any given decision that you're making. So it all ties together, and you need to balance it out so you reach your targets and potentially can become even more ambitious than you have displayed. I think that's the goal for all of us. I just have a comment on you, Brian, when you said between sustainability. I like to think the same way, but with another angle, is that I think the spread could actually widen, as you're saying, but I think it would be more a punishment for those who do not comply with their goals. So actually, when I go out and of course, I would like to have a wider spread than the 5 basis points, but I actually think that the ones who do not comply will get a punishment of much wider than 5% if you do not comply and you don't have ambitious targets enough. That's at least how I think about it. So I agree with you, but with that angle.
I think that's fair, Kim, and I think obviously that the ultimate punishment will be that those that are not going to even engage will find that their access to capital is severely shortened. So no, I think it's the same. It's the same aim. It's getting there by a different route. But yeah, as long as we have that framework, we fully agree with that. I think that's a really good point.
Totally agree. Yeah. So I think that's my brief input. Is just we work on a daily basis and we need to be ambitious. A little side note is that when you do all the things that we are talking about here, you also get inspired. So I think we learn on a daily basis working with new technologies. So I think we all also get inspired into adjacent businesses that we would probably not have looked into some years ago, but we are all working with things alongside our normal business that we would invest in, some of us or probably all of us as new biz. I think that's an interesting part of our daily business now and another way of pushing this agenda forward.
Thank you, Kim. Now, Alex, you touched upon the social aspect and different stakeholders, including crew and local communities. Do you find that both for social aspects and environmental impacts, that the practical implications or advantages that you face at the moment, the challenges and opportunities are prioritized in a manner that allows you to both create long-term value through your management and your performance, but also anticipate risks and comply with heavy regulations?
So maybe I can answer this in reverse. So if you take the UN Sustainable Development Goals, and we talk a little bit about strategy to get down to what you're referring to, I think what's very important for companies and for investors when they look at different public companies is if you have a consolidated strategy where you pick 3 or 4 goals and you show measurable improvement against them, which what you discussed, what I alluded to, could be one aspect. And that creates value. I think it's very important for us not to make it like a tick box exercise, just to put out a report that is copy paste of maybe what other people have seen in the market, and to show real kind of belief and culture that's embedded, as we referred to earlier, in the culture of the company. It's not easy. It's a challenge. It's an evolution, and we're going through it now. I wouldn't say we're finished, of course, but that's how I would speak about it to our team internally. Is that you start from the pyramid and kind of build down from there to create this value. And I think that the investment community, and you see it with activists looking at some of the oil companies in the US, is very tapped into this for sure. And with the energy crisis now in Europe, and with shortages potentially over the holiday period, shipping and these issues are at the forefront of people's mind. I mean, it's the first time I've seen ships on the pictures of ships in major newspapers ever, other than Tradewinds or Lloyd's List. People actually know about container ships or tankers. It's refreshing in a way.
Thank you, Alex. So we have almost 4 minutes left. I'll just pose one final question to all. We talked a lot about the transition risks of climate change and how changes in regulation, how you reduce your emissions, what are the financial impacts of this transformation. What about the physical risks? Do you have anticipated? Are you doing a risk assessment for the physical part, either for acute physical risks or chronic physical risks that will affect the industry? Is this part of your planning right now? Is it, are you focusing more on transitional risks?
Kiara, very briefly, and if that's relevant to your question, we are participating in hazard workshops, which are risk assessment workshops, when it comes to the use of a specific type of alternative fuels, in order to ensure that all elements with regards to the handling and the storage of such fuels ensure the safety and security of our crews on board. So as a company, we are participating in such initiatives. Thank you.
Thank you, Charis. I was referring more to extreme weather events or chronic events, in the sense that whether this is incorporated also into your analysis in terms of scenario modeling. So, for example, under a 2-degree scenario, what geographies will be more impacted for extreme weather events, and if you incorporate that into your route planning or using scenario narratives to that direction.
Yes, we're certainly starting that, and we've core part of the sustainability committee that we set up in 2019, where that risk register is assessed by the non-exec members of that board, and also there are executive members of that board as well. And also we're trialing a lot of the data points that we've gathered from that, and looking to implement those into the scenario analysis that we look to roll out under our sustainability manager, who we hired earlier this year. So yeah, it's very much bottom up. And you know, it's very much trial and error in terms of some of the findings that we're having, but it is definitely a core part of what we're trying to roll out as part of that risk assessment, and have some sort of tangible elements and data that's fitting into that. As we all know, in all of us, in all of our roles, you know, extreme weather is something which we have to take on board, you know, as a necessary part of our wider risk management and safety concerns anyway. So yes, definitely, but it's very much in its infancy for us.
Thank you, Brian. And it also links a lot to a lot of the reporting standards, so CDP, TCFD, etc. So I'm guessing it's valuable for reporting purposes as well. So our time is almost up. I would like to really thank you for this very useful and fruitful dialogue. I would like to thank Capital Link for giving us this opportunity today, and all of the participants for attending this panel. So thank you very much. Have a nice day.
Well, big thanks from me as well for a terrific panel on a great topic. Thank you very, very much. Thank you.
Thank you, Kiara.
Thank you.
Thank you, Kiara. Thank you.
Bye-bye.